designing a CLO ETF, what matters most in terms of tradability?
So almost when you get to the point of tradability, a lot of that hard work has been done prior. So when we look at product development, that's one of the key pieces to us in terms of ensuring that you have a successful ETF launch, and that's not limited to CLO ETFs. We spend a lot of time working out the investment management process, being clear and concise, and so investors can easily access the underlying investment objective. We spend most of our time, part of that process, talking to Matt and his team at RBC, really in regards to how will they operate on the primary market versus the ETF, what options are available to them, and really that comes down to how flexible we can be as an investment manager, working with them in ensuring that how clients want to trade, whether that be RFQ, OTC, or on lit exchanges, that there's optionality there for the APs and market makers. I think we're very lucky at Janus Henderson. Obviously, we dominate the US market in terms of AUM, circa 28 billion already under assets. When we're bringing that expertise over to Europe, we've really looked at some of the pitfalls that we faced out in the US and some of those key benefits that we're able to bring here. So trust of the brand, trust of what we've done previously, we've been able to copy that into Europe. And even if the European ETF in CLOs is relatively new, it's not a new asset class for us. It's one that we're very well versed in.
And Matt, how are CLO ETFs priced intraday? And can you walk us through the key differences compared to trading corporate bond ETFs?
So in terms of our pricing or fair value pricing of an ETF, we often look to see whether or not we have available data on the asset class itself. CLOs sit in a sort of a bucket of assets where it's quite difficult to get market data or sort of readily available trading data on the ETF itself. We have availability of runs of other CLO market makers and the like that we can sort of test and look at. In terms of the CLO market, we tend to use models. We're more on the side of using models to calculate a fair value rather than actual trade data or bids and offer or actual sort of screen bids and offers. If you compared it to say an equity ETF. So in terms of that, we tend to sort of rely on models more often. The models will look at what was the most recent sort of fair valuing of the ETF that we can obtain, and then we sort of proxy out in terms of where we look at things from there, and use a proxy calculation for the value of the ETF itself. If you're going to compare it to something along the lines of corporate bond, it's about the availability of that proxying and how far out you proxy. So in the corporate bond space, there's the availability of trade data that's more recent that can be utilised in your fair value calculation. And in terms of doing that, then you have more sort of reference points that you can then proxy out from. Whereas the CLO model might have a singular reference point at the start of the day, and then you proxy out from that detail there. So that's the key difference at this point. They are very similar in the sense that you do have to proxy model to create a fair value, but we tend to sort of say that the CLO has less data availability, so the proxy has to be more conceptual.
Okay. Matt, what role do authorized participants and market makers play in keeping spreads tight for CLO ETFs?
So the two roles are separate. A market maker is someone who would provide bids and offers in the ETF, either OTC or on exchange. The authorized participant has a legally binding agreement with the ETF issuer to be able to create and redeem units in the ETF itself. As a concept, it's key to be an authorized participant in order to be a market maker, but you don't necessarily have to be an authorized participant to be a market maker. The authorized participant is also, I guess in the case of CLO ETFs, is very key in the sense that they have the ability to push and pull CLOs out of the fund in return for ETF units. So they can add an extra layer of liquidity to the whole process. So you're not so reliant on the fact that there's maybe buying interest in the market, you've sold CLO ETFs to the market, and now you have to cover them by the ETF market itself. You have the option to either go to the to the ETF provider and cash create units in the ETF. You know, the CLOs that then are purchased on behalf of you, and you receive ETFs in return. But then you also have the other concept that if you have CLO inventory on your books or available to you, that you can propose to move those CLOs into the fund in return for the ETF itself as well. So if you talk about liquidity, it is adding an extra 2 layers essentially to a traditional market in the sense. So you have the asset itself that can be traded, bought and sold. The market maker is trying to placate liquidity concerns around that. But then you can then step into the CLO market or step into other sort of activities within your organisation to actually bring those points of liquidity into the ETF market itself. It's one of the reasons why the corporate bond ETF market is so vibrant and liquid in that sense, and it has the same conceptual sort of bearing on the CLO ETF market as well.
Andy, what do you think?
Obviously, from an issuer perspective, the main focus for us is ensuring that our APs and market makers have got trust in the product, and when they come to the primary market, they're able to create and redeem in an orderly fashion, really in line with the cost that they expect. And obviously this goes into the active management of the CLO ETFs. If that cost is moves up and down considerably day to day, that only leads to negative impacts on clients because of pricing becomes more tricky for Matt and his team when they are providing those quotes to clients. So ensuring that we're able to provide stability and optionality around creation and redemption mechanisms, and also in the CLO space where many authorised participants aren't sitting on natural CLO inventory and will look to cash create with the fund. So ensuring that, depending on how you're looking to create and redeem, there's an orderly way of doing so, that they have trust in the product so that when they get those costs of creations back, that's very much in line with our expectations. So that trust part is very, very key for us.